welcome to our 2015 year-end mutual fund cafe. Well, it's a nice time to take stock of the year that was and to check out what are the big themes of 2016. And I have with me to do that four of the biggest minds in the mutual fund industry. I have with me Sunil Singhania of Reliance Mutual Fund, S. Narain of ICICI Pru Mutual Fund, Navneet Munot of SBI Mutual Fund, and Prashant Jain of HDFC Mutual Fund. Between them, these four gentlemen manage over 2 lakh crore in terms of assets under management, and I guess if one looked at their record, it would be half the mutual fund industry that is represented over here. So the best advice that you can get for 2016 and the years after will come from this room here. With that preface, let me straight away start off with what the themes might be for 2016. Well, first, let me kick off with you, Prashant. You have been one of those staid investors who have betted on the Nifty, on the bigger stocks. But 2015 has not quite rewarded those who went with the Nifty. In fact, there perhaps you have a negative return. We had a calculation. If you had put the same amount of money in all the 100 BSE 100 or CNX 100 stocks, you would have got a 24% gain, whereas the Nifty would have given you probably a 5% to 10% negative return. Would 2016 continue to be a mid-cap year?
I think it's hard to say, to be honest, but and it was even, 1 year back also it was equally hard to foresee this. I by and large feel that the valuations of mid-caps do not leave any material upside in the short to medium term. So they are good businesses, but I think with the the large gap in returns between large caps and mid caps over the last 2 years, there is no material discount of mid caps over large caps. So I would not expect these high returns, materially high returns, to continue.
Okay, but the frontliners themselves, the Sensex Nifty stocks, the argument has also been that about 60-70% of them are externally focused, export oriented as well, and the world is not a great place. Will that change? Will large caps, either because of valuations or because of cyclicality, give you returns in 2016?
I think I would be quite positive on the large cap index. Mid caps may do better or they may do less, but just talking about large cap standalone, I think it's a fair comment that reasonable part of the index, the businesses rest outside India, or they are exposed to outside India business conditions. But still, I think the way the economy is improving, the way the IIP is improving, and I think profit margins in companies are bottoming out in the current year. Next year onwards, even commodity companies may deliver better profits than the current year. So I would be quite optimistic on the large caps as well going forward.
Actually, the month of December has been very kind to commodities. I was looking at the LME charts as well. They are back to 10-week highs. Would you share that enthusiasm, Navneet, that commodities are back in fashion?
So most likely they have bottomed. Looks like over the last couple of years we have avoided any exposure to commodities because of the global macro environment and looking at the demand destruction in China. But it looks like most of the commodities, both the industrial, energy, metals, soft commodities, are at their lowest point in last 12 or 15 years. Several of them are below the cost curve. It's very difficult for most of the producers to survive at these levels, and it looks like a bottom is getting formed, and maybe it could be different. In terms of companies, of course, the kind of slowdown or the kind of destruction that we have seen, those who will be able to protect their balance sheet and I think have invested in business, maybe the gainers next year, but you have to be extremely selective.
Okay. Would it be only a tactical purchase? Because, after all, the Chinese overcapacity in some metals, at least in steel, is fairly onerous. So is this just a tactical recovery, you would say, or like Navneet, you would go a little stronger on commodity stocks, say steel stocks, Naren?
I think the super cycle is over. as far as the Chinese super cycle.
Okay.
If India can create a super cycle, there's a possibility of a new super cycle. It doesn't
But
seem
this is
to be
1/10 the economy.
doesn't seem to be in the anvil. But otherwise, the super cycle of China consuming the industrial metals is over. But valuations have become clearly extremely cheap. So, I think if something were to go from 0.5 times book to 0.6 times book and go up 20%, that is very easily possible in this kind of environment. What we have seen is that by and large every year there's a good move. And
In commodities.
And that we have seen over many years at this point of time. The problem is if you buy after the boom, then it falls for a long period of time. So that's where what we see. So I think there is margin of safety, there is some value, but the structural cycle on metals, is something which we'll have to worry about.
Would it be steel or would it be non-steel?
See, clearly, steel is something which has got much more overcapacity, and it is clearly a less consolidated industry, whereas products like zinc are much more consolidated. So you tend to believe that it would be the consolidated commodities which have a better opportunity.
Okay, actually, would it be metals or would it be oil that you will bet on? Are our advantages of oil over? Will 2016 be a negative year as far as India is concerned in terms of oil, Sunil?
I don't know, why do you say that?
No, I'm asking you. I'm asking you whether oil has bottomed or do you think it continues to belabor in the 30s?
Frankly, at least we are not experts on oil, but the way the scenario is developing, I think technology is changing. You have cheaper sources of fuel, which will include renewables. You have more production happening. And the world is not a very great place as far as growth is concerned. So demand scenario is also not going to be very robust. So given all this, I think we are definitely in favor, in the camp of oil not hitting the earlier highs. It's fallen to 35, maybe it might rise to 40, 50, who knows. But the other thing is that this year we have got only 50% of the advantage of oil because it's been continuously going down. If these prices continue, we will get as much extra benefit as we have got this year. So I think next year, in fact, the full benefit of oil is going to be in 2016. In 2015, you have not got that full benefit of oil. And at least we would, tend to believe that the days of oil, hitting highs are much behind us. It doesn't seem to be the case.
Oh, no, that point is taken that perhaps 120 and all are not what we are going to see, at least in 2016. But I was only worried about the FISC. You think that you still have 2000 FY17 also one needn't worry that our subsidy bill will shoot up or that we will lose the advantage of...
See, number one is there is no subsidy left because the fuel is now linked to the market price. That is point number one. Second is, as I said earlier also, we have not got the full... So, this year maybe the average price of crude which India has imported is maybe 70, 75. It's not 36, because we started with a very high base. So, till it reaches that level next year, we'll have at least that much kind of an advantage. And at least we would tend to believe that, oil moving beyond 50, 55 in this kind of a scenario looks very, very difficult.
Okay. So, commodities would form a part of your stock selection also?
So, I agree with, all my fellow panelists that it's time to look at them. But having said that, the balance sheet of some of the commodity companies in India have been stressed. So, interest is becoming a big component. The second thing is the advantage which India had because of cheap raw material cost is sort of getting negated because while the world has moved towards a lower power cost, in India, in fact, the power cost for a lot of these companies have gone up because they have had to buy coal blocks at a higher price. Earlier, they used to just get coal blocks for free. So, the dynamics from being one of the lowest cost producers, I think even companies like Hindalco and all have moved towards the center of the cost curve rather than at the lower level. So, you'll have to, it's not as easy as it, looks like.
In your top holdings, Sunil, I don't see any commodities at all. And you're not going to, make any entry.
No, we have some commodities in some of the funds. It's not that we don't have any commodity, but yes,
not in the top 10.
There is no real sort of a comfort we have that we should just go overboard and buy 5-10% commodities. Having said that, I think the world is a very dynamic place. You have to keep on looking, you have to keep on analyzing. You never know what might happen, because trends are changing very, very fast. So it's our job to be on the toes all the time.
Fair. That's true. In fact, let me start with your, top stocks. There is a genuine preference for consumer-facing stocks. I mean, you have stocks like United Spirits in your portfolio. You also have a lot of drug stocks. So let me start only with consumption first. Do you think consumption has picked up? Would consumption stocks be a theme, or would valuations scare you?
So one is, while admitting that we are bullish on the urban consumption theme, we are also cognizant of the fact that there are some consumption, products where the penetration is already very, very high. So we are trying to avoid those. And there are some, within the consumption basket, some products where the consumption in India is still very low. So alcohol, the penetration is only 10-11% as far as IMFL is concerned, or garments or branded business where the penetration is quite low. So, we are focusing more towards those kind of consumption themes. And our belief is that with 1.3 billion people and what has happened in the world ultimately going to happen in India, there is no reason for us to believe that we'll follow the global trend, and our companies will be much bigger than what they are globally.
Is there a V-shaped recovery, or at least a fairly healthy recovery for consumption stocks or consumption in 2016?
I think we are focused on recovery, whether it is U, V, W, we don't care. I think the clear focus is that in 6-7 years, a lot of these themes or sectors or sub-products would be 2 to 3 times what they are today in terms of size. And I think that is where we are focused on.
Okay, no, I was only trying to develop Prashant's theme that he sees green shoots. Do you think economy-wise, 2016?
So there are select, places where you are seeing that. So car sales have been pretty good. Air traffic has gone up by 20%. The month of November, though it was a Diwali month, we have seen at least, the malls doing pretty robust business. The multiplexes in December have done, pretty good business. And everywhere you go, the flights are full, the hotels are doing very good business, the hotels are full. So there has to be something, Now, how do you actually monitor that is very difficult, but you can only feel it. And
let me get the feel on growth from the other participants as well. But for that, we have to take a break. I'm back with all our participants on whether finally the improvement in earnings growth happens in 2016, and if it does, in which quarter. Back in a minute.